What is market capitalization? Market capitalization is the total value of shares that a public company issues. A public company is one whose shares are quoted on the stock market and can be bought and sold by members of the public. People often use the shortened form market cap instead of market capitalization. We calculate market capitalization by multiplying the number of company shares outstanding by the price per share. In other words, all a company's shares times the price of each share. Shares outstanding are all the shares or financial assets of a company that have been authorized, issued, and bought by investors. The terms shares outstanding also includes those shares that investors own. When determining stock valuation, market cap is one of the main factors. It also determines investors' perception of how much the business is worth. We do not use market cap when calculating total asset figures or net sales. Market capitalization is an indicator on the returns for a particular company's stock. Stock in this context means shares, hence the term stocks and shares. Market cap is also a risk indicator. When investors are deciding which stocks to buy, they look at each company's stock capitalization. It helps them determine which stocks can meet their risk level and diversification goals. There are large cap, mid cap, and small cap companies. Large cap companies have a market capitalization of at least $5 billion. Those of mid cap and small cap companies are between $2 billion and $5 billion and less than $2 billion respectively. Let's imagine, for example, that ZYX Incorporated has 50 million shares outstanding. Each share is worth $100. Therefore, ZYX's market capitalization is $5 billion. That is, 50 million times $100 per share equals $5 billion. Many investors, however, insist that a company's enterprise value, or EV, is a more comprehensive measure of its net value. EV accounts for debt, preferred stock, total cash, and cash equivalents. According to the Corporate Finance Institute, EV looks at the entire market value rather than just the equity value.